Hi guys, good evening. So let's get started. See what we have to cover today. So today we'll be talking about the four types of supply and demand. So yesterday we talked about supply and demand, right? And I already posted this on the YouTube channel, so you can see it here. This is supply and demand for yesterday. Listen, so you can just before you watch this video currently, you can just watch this one, right? You can just get to watch this, right? So this way I was explaining so I explain supply and demand here, right? So you can just watch this to get more insight on it. So let's move to what we are talking about today. So today we'll be talking about the four. So let me just write that down. Yes, the four types of, right? So you can call it either types or you can call it kind, depending on how you want to put it. So let's say four types of supply and demand zones, right? So this is what we're talking about today. Four types of supply and demand zone. Now you already know what supply and demand is, right? I said supply means aggressive selling, while demand means aggressive buying, right? So this is simple something I guess you should understand what supply and demand is here. So um now the first one we have, right? So let me just draw it and then I'll explain all of them, right? So I'll draw it and then I'll explain what they really mean, as well, whether it's a demand or is it a supply zone, right? So the first one will have something like this, right? And then we'll have something like this, like this, like this, like this, and then we'll have something like this, right? So the second one will have something like this. It's piling up, and then we'll have something like this, right? Like this here, and then like this. So this is the second one, and then the third one will be something like this, right? Then something like this up here, then something like this, right? So then the next one, so the next one is going to be something like this. So now these are the three ways you are going to see them. So this is for our demand zone. I'm going to explain, right? I'm going to explain this. So let me just type that down here. So this is our demand, sorry, demand zone, right? This is our demand zone. This is also our demand zone because price is going up, right? Demand zone. This, no, from the way I've seen as I'm dictating, you should just understand easily. So here will be our supply zone because price is going down from here. And then here will also be our supply zone as well. Right, supply zone. As I said, from the way you see me just drawing, you should really get the idea of what is really going on here. Right. So now we have this, right? This four. So let me just expand this a little bit more. I think we don't really need. So let's just expand this, right? So now this is what we have here, right? So we have these four types of supply and demand zone. So these are different zones, right? We have the demand zone, which you see here, right? We have another demand zone, which is this, and then the next two we had here was the supply zone. So here is the supply zone, why this is also the supply zone as well. So now let me explain what all this, or what is really happening here, right? So I'm going to give an explanation on what is happening here. Now, at this is where this is price, right? Price move all the way up here like this, right? So this was a demand zone that causes move in the market. Right, so when price came here, it pulled back down, it went up again, pulled back down, went up again, and then it came back down, right? It came back down. So this is a reversal, will I call it pattern or reversal? Yeah, so let's call it reversal pattern, right? So let me just put reversal pattern up here. Right, so here will be a reversal. So let's just put reversal, right? Because price actually reversed back, right? So at first price was going up, right? When they created this triple tops and then reversed back down, right? So now let's explain what is happening here. Now, here, this price that pull all the way up here, it will call this our rally. So we have something called rally. So let me just use text to write that here. Go here, our rally. Rally. I'm going to make this a little bit smaller. So this is our rally. I feel like trying to slant this, trying to see if I can slant this. Right. Let's see. Yeah, I'm trying to see if I can slant it. Right, if I can just slant it, but in that case, maybe I'm just going to leave it like this. So I'm trying to slant it, but I hardly see any. Okay, I don't know if comment to work. Hardly. Does this make sense? I don't really think so. Let's just put that black. Let's just put no color. So this will work it. Okay. This one using this. So this is our rally because price went right, it's rallied up like this. So this is our rally, and then we call this move here that happened, we call this base, right? So we call this base, right? So I don't know how I should do it. Let me just use this rectangle tool, right? So here it's called, let me just type it, it's called base, right? So here it's called base, and then we have this drop here because price actually dropped. So we call here drop. So I hope this you will understand what I just did here. All right, so let's just move that a little bit. So now price rallied up, right? So rally base drop, right? Because this is a reversal pattern. So price rallied up here, and then it's base meaning which it's consolidated for a while and then it's dropped, right? So this is a reversal demand zone. So this is a demand zone here, right? Price rallied up and then base drop, rally base drop, rally base drop, right? So at some point price went up and then it rallied it at this point, which is like consolidated for a while and then it's dropped. So it's not like it's continuing going up, right? So now I hope this is clear. This is just a reversal pattern, reversal market as well. So at some point, price rallied up and then base, which is like consolidate and then drop, right? So the price dropped back to the entry or to where we entered for the level. Now the next demand zone is, I sure already have the concept of this rally base rally, right? So next thing we have here is called the rally. So just be copying this. So this is our rally, right? Because price went up, so here is called our rally. Then here, I told you here is our base, right? So when you see this consolidation here, we'll call it as our base, right? We'll call it our base, and then here will be call it our rally, right? Because price rally continue rallying up, right? It's not like price dropped. So this here is rally, right? Base rally, right? Rally base rally. So it's different from this first one. At this now, this is a continuation. So let me put that down here. So this is a continuation market or continuation pattern. Continuation. Right, so this is a continuation, either pattern or market, and how you choose to call it, right? So this is a continuation. So the first one is this demand zone, right? So price rallied up, base drop. So this is a reversal pattern or reversal market, because markets are reversed back, right? So on the second demand zone, what we have here is a continuation reversal, right? So price rallied up and then base rally, right? Rally means going up, base means like consolidating, and rally means continuing up, drop means it came down, right? So price, this second one, which is continuation pattern, price rallied up. So you see price do something like this, base and then rally, right? So rally, base, rally. While the next one is the supply zone. So this is our supply level, right? This is our supply level. So you just have to get the concept of this as well. So this price dropped because I explained what drop. You can see this is drop, right? Price dropped like this. So this now is our drop. Remember what I said here. Here is our base, and then the next thing that happened, price continue dropping. Right. So here is our base, right? So let me just write that here. So here is our base, right? Here is our rally. It's our drop, sorry, not rally. So here is our drop, base, drop. Right, so we have two things here: drop, base, drop, right? For the supply zone, drop, base, drop. So this is a continuation um pattern as well, or a continuation market, right? Because price continued in that direction, right? Price continued in that direction. So the next one is the next supply zone is a reversal supply zone, right? So let me put reversal here because the price reversed back up. So this is normally, first one here we have is what we call our drop, right? Next one is what we call our drop. And then I told you here is our base, right? So this is our base, and then price rallied up, right? Rallied up. So this is a reversal pattern or reversal market, depending on how you want to call it, either a reversal pattern or a reversal market, but it still looks like a pattern as well, right? So these are the four types of supply and demand zone that we have. Now let me start again. The first one, which is this one, the demand zone, right? Price rallied up. So when you see this move like this, it's called rally. Then this consolidation that happened here, right? This consolidation at this point is what we call the base, and then this price that dropped like this, what we call the drop. So when you're classifying, you say price rally, base, drop, right? Rally, price went up, which is our rally, right? Price went up, rally, and then base consolidated for a while and then drop, right? So this is a reversal pattern because at some point price was going up and then it reversed back down, right? So this is a reversal pattern or reversal market. Now the second one, which is same thing, price rallied up, but in this case it did not, because this is a reversal, right? Price reversed back to where it started the move from. But now the second one is a continuation pattern, meaning that price will continue going in that direction, right? Price will continue going in that direction. So next thing that happened here, price rallied up, right? Rallied up, and then base consolidated for a while, right? And then rally, meaning that it's continue going up. So this is a continuation pattern. So which you see I put a continuation. Then the next one is our supply zone, right? So this is where market started from. Now price went down like this, which is our drop. If you use this to understand this. So we had this drop, right? Then price or the market consolidated for a while, right? And then drop. So this is a continuation pattern because price was going down, just consolidated for a while, and they kept on going down as well. So this is a continuation pattern, right, for the supply. So this next supply zone, right, price dropped, then it's base, and then it rallied up. So this is a reversal this thing reversal patterns because price at some point was dropping and then it just consolidated for a while. So if it had continued going down like this, they will know that okay, this is a continuation pattern, but it didn't go like didn't do that way. It's reversed back up. So this is a reversal pattern. So I hope this is clear. We have the continuation and the reversal. So you can just watch this over again to understand it. As I said, um supply and demand. Supply means aggressive selling, demand means aggressive buying. So if you use it in the concept of these types, you will understand it because you can see this aggressive buying we had there, right? This aggressive buying, and then price consolidated for a while and is dropped. So these are rally base drop. This next one, right? So this, you can see this demand level that shoot the price up, right? So price rallied up, base the rally continue going up. Right, this supply zone price drop, which is our supply. So this is our supply zone, the price dropped, then base and then drop, meaning that it's also a continuation pattern. Right, this is another supply zone again, price dropped, right, aggressively, and then base and then it reversed back up, right. So this is a reversal pattern. And there are some key things you need to note, which I'm going to see them, see if I can how fast I can type them here, right? So let's see how fast I can type these key things that you need to really just have it in mind, right? About supply and demand, or about these four supplies and demand. So the first one, let me just increase the size a little bit more. So the first one we have here is that high quality. So let me just type that here. High quality zone and low, sorry, and low. Please mute your. So low quality zones are differentiated. So I hope this are stay differentiated. Differentiated by, right, by momentum. And so the next one we have here is the more the momentum. This momentum is like volume, right? If you watch the previous video about candlesticks, you notice that I was comparing like the momentum or the volume of an engulfing candle is different from the candlestick that is engulfing, right? Because there's a lot of buying pressure or a lot of selling pressure, right? You can see the candlesticks are bigger and different from how it will look like, right? So I'm still going to explain that. So the more the momentum, which is either buying or selling, right? So that buying or selling pressure, comma, the more and higher, yeah, higher the quality of those zones, quality of the zones. So this is just trying to tell you that the more the momentum, right? So if like for instance here, the more if you had seen something like this, right? After this move was happening here, just went like this, and then maybe price did not continue, like there's no that aggressive candle, and then price maybe did something like this, right? And then move here. Even though there was a momentum that started from here, right? It was not strong enough, right? So you can see the more the momentum, let's say you are buying, so the more the buying pressure, the more the higher quality of that zone is. So if there's a lot of momentum here that pushes this price all the way up here, it's telling you that this level, which is this demand zone or this support level, will be strong, right? It will be a very quality zone for you to wait for a retest, and then you're going to enter for that trade. So next one is, how many minutes we have, because I'm trying to like cover up as fast as possible. So the next one we have here is it's always wait, right? Next one is always wait for a retest, which I just explained now, right? A retest or rebounds, anyhow you, or a pullback, whatever you want to call it, or a of any zone before, sorry, before you enter the trade. I explained this yesterday when I was talking about supply and demand. So enter when there's a demand, right? At that aggressive buying, you draw your demand level. Now you need to wait for price. You don't just enter the trade because it can start buying. No, you need to wait for the price or wait for the market to come back to that demand zone and then give you confirmation, either rejection candlesticks, like either multiple weeks rejection, maybe your morning star or some your pin bar shooting star, and just give you some confirmation at least, or your engulfing candle, and then you look for how you enter for that trade, right? So that's what I mean here. Then the next one will be supply and demand works with market structure. I already explained what market structure is. Structure. And what is market structure? Market structure is just how price move from one point to another, the direction, um the way in which markets move from one point to another, right? So that is just what market structure is. So these are the four things you need to note. Right, so I'm going to explain all of them here, and let's see if I can see any of it on the chart, because we don't really have much time. So let's see if I can see any of it on the chart. I'm going to show you. So now the first one is high quality zones and low quality zones are differentiated by momentum. Right, so let's go to our trade for yesterday that I was giving an example of. I hope we can spot something. Okay, so now let's give an example of this. Right, so this, now you can see what's happened here. Right, so here, now let me just delete this. Right, so you can see this level. Right, so let me just use this thing. Like this here is a resistance level. Right, because you can see price came, or it was initially a resistance level, right? It was initially a resistance level because price went up, came back down, and then the next thing that happened here, price broke this point, right? So price broke this point, and then now I told you, whenever a resistance level is broken, that resistance level automatically changes to a support level, right? So this is where resistance, support changes to resistance, while resistance changes to support. So this was a resistance level before, right? Because price was coming here and pulling back down, and the next time price went here, it broke past this resistance level. Now this resistance level automatically changed to support level. Now price came down, retested that level, went up again, came back, right? Came back, retested that level again. So let me just do this. So price broke it, retested it, went up, retested it, and then pull up again. Right, price still came back to this level. So you can see price is not able to break this level now. This level have become your support level. Right, so price went up again, came down to retest it. Price went up again, came back to retest that level. So you can see that the level is actually strong. Right, so it's telling that this level is actually strong. Now at this level, something happened here. Now you can see, now let me just give you some few seconds. Can you spot your demand zone? Right? Can you spot your demand zone? I already explained what demand and supply is. So demand means aggressive buying, where you see this momentum, right, in the market. Why for supply means aggressive selling. I already gave a video, a illustration yesterday about it, right? So now, I don't know if you can guess just within a few seconds, right? So yeah, this is our demand zone. As I said, you draw your demand zone, the candlestick that caused that before the sharp move happened, right? So now if the price rallied up, right? So you draw your candlestick, you draw your your demand zone. How you draw your demand zone is to go to your rectangle tool, right, which is this. Now you draw the candlestick, the bearish candlestick that called before the move happen, or before the 3 or 4 consecutive candlesticks. And this is our bearish candle, which is our red candle. It just depends on if your color of your candlestick is red and green. You easily understand it. But this is my color of my candlestick. This is how I like to see it. So now this is my bearish candle, which is this black. So what I'll do is to draw the high and touch the low of that candlestick and just drag it, right? And drag it. So this is what I'll just do here. So you can see I've drawn my demand level, right? So I can denote here with demand zone. So this is my demand zone, right? This is my demand zone. Now what you need to do is wait for price to come back to this demand zone, right? Wait for price to come back to this demand zone. Now based on what I was explaining here, I don't know where else. So let's see. So what I explained here, right? I said high quality zones and low quality zones are differentiated by momentum, right? They are differentiated by momentum. Now, but when you go to um this chart, sorry, my network. Now, when you go to this chart, seems like my network is unstable. Now, when you go to this chart, I say they are determined high quality zones and low quality zone are differentiated, right, by momentum. Now, you need to spot the momentum, the volume of the candle, of the candlesticks, right, that caused. Now, if you look at the momentum here, right, the momentum that happened here is different from maybe what you see here. So you cannot come here now and start saying this is your demand zone because price went up. No, there's no momentum. So you need to wait for this aggressive move, right? This aggressive, you can see this aggressive. This is telling you that the smart money, the big banks, right? This big institution after have entered into the market, right? Causing this sharp move. Yeah, so this was an aggressive buying. Now, what you need to do is to draw, take your rectangle to draw your demand zone, which is the candlestick before the sharp move happened, before the 3 or 4 consecutive candle. Now you draw it from the high and the low and draw it to the right hand side. Now what you need to do is wait for price to come back to this level. Right now, when you wait for price to come back to this level, you have to see. Now I'll move to the next thing I wrote. So let me see if I can really drag this thing and bring it here so that it will be easy to be explaining it. Right, so let me see if I can just tag it and bring it all the way up here because I don't have much time. Let's see if I can just copy this so I can explain it easily for me. So now I said, and the first thing I said here is that high quality zones and low quality zones are differentiated by momentum, right? So for you to know that if this zone is a quality zone, you need to check the momentum, right? The momentum of what is happening. So the momentum here, you can see this momentum. This is saying that okay, this is a high quality zone, high demand zone. Now the second thing here is the more the momentum, without buying or selling pressure, the more and higher the quality of that zone, right? So if there's more buying continuously like this is saying that there's a lot of more, like a lot of buying. So it's saying that the zone two is also a strong zone, right? It's a quality zone because of the momentum. Now, always wait for a retest or a bounce of any zone before you enter the trade. This is what I'm talking about. Now, whenever a zone, a demand or supply zone or an aggressive buying or aggressive selling happen, and you have done either your demand or your supply zone, now always wait for price to retest, right? So you can see, always wait for price to retest or a bounce of any of this zone before you enter the trade, right? Before you enter, so always wait for that retest. And I say supply and demand works with market structure. Now, what is market structure? It's just divided into two: the uptrend and the trending markets and the ranging markets. So trending markets, which will have the uptrend and the downtrend. Uptrend meaning market creating series of higher highs and higher low, while for a downtrend, market creating series of lower highs and lower low. So now we wait. This is us waiting for this price to come back and retest this level, right? And give us a confirmation before we enter the trade, right? It gives us now you can see this is price coming here, right? Price came back to this level and tapped into our demand zone, right? Price came here, tapped into our demand zone. So now what you need to do is to wait for your confirmation, your key confirmation that will tell you okay whether to enter for this trade or not, right? So now what are your confirmation? This is where you need to be switching between time frame, right? So we're on the 15 minutes here. So let's check. I've already seen some confirmation on the 15 minutes, right? But let's see again on the 30 minutes. Now I already talked about rejection candlestick, right? Multiple weeks rejection, multiple candlestick weeks rejection. If you watch my candlestick these videos or pattern, you remember when I said something like this. So you can see this was multiple rejections, right? There was a lot of weak rejection. This can be like one confirmation, right? This can just be one. So the second confirmation can be okay, price at our demand zone, which is also a support level, right? So if you are also switching between different time frame, you just see different confirmation, right? That will tell you either this trade is going to hold or not. So let's say on the 30 minutes time frame, right? And then this we have this zone here. Now the first zone that we have is that to tell us okay if this is a very good for is good for us to enter the trade. Now we have drawn this our demand zone, which is also our support level, right? So wait for price to come back and retest this level. Now if you check here, you see price giving us this rejection candlesticks, right? And also you can see more like a gravestone doji here, right? Even though it not really form like T, but you can see more like a doji here. Even though you go to the 15 minutes time frame, you also see something like that as well, right? So let me just up. So you can see also this rejection as well, right? You can see this rejection as well. You can see this pin bar. I talked about pin bar or shooting star, all of that. I talked about shooting star, and I say shooting star or hammer are called pin bar. So you can see this rejection as well. You can see this. So you are not okay with this confirmation, let's say you have two or three confirmation and you're not okay with it, you can still see again we have a bullish engulfing candlestick. So this will having more than three confirmation. The first confirmation is that price came to our demand zone, which is one, which is also our resistance level. You can call that two. Then the third one, price giving us multiple weeks rejection, which is three, right? You can see a pin bar too here, right? With a shooting star. And if you are not okay with that, you can still wait for an additional confirmation. You can also see that the moving average in crossover, right? You can see it's crossing below it, right? Meaning that it's telling you that it's for a buy. If it's crossing above it, it's telling you that the price is selling. If it's crossing below it, meaning that it's telling you that price is buying. So you can see another engulfing candle. So if here it's not okay for you to enter, you can still wait after this confirmation happen, which is about five confirmation or six. You place your trade here, right? Put your entry here. You can put your stop loss like above here, right? And then you target 1:2, right? So 1:2, and boom, you can see price came here and hit your take profit. So you have just made twice your money. As simple as easy as that. So you can see it, right? So this is just how we trade demand and supply and supply zone. I don't know if I can really spot a supply level. Let me explain that very quick here because we just have few minutes. Right, we just have few minutes to the class. So let's see if I can talk more about something else again before this time goes. But you can just use based on what I already explained here, right? Based on what I explained, you can just use it um to to just revise over and over again for you to understand it, right? So let me see if I can just spot other some other levels. I talked about them yesterday. Let's see if we can still spot some aggressive move. I don't think I can see any aggressive move here. I think we can't really see any aggressive move here. Okay, well, let's zoom out and see if we can see any move here. So I can't really see any move here, and I don't have much time, right? I don't have much time here. Well, let's see. Okay, this is also an example of a demand zone as well, right? This is an example of a demand zone. So you can see price rallied up, right? You can see this momentum. You can see this moment is a very strong momentum. Now you draw the candlestick before the move, the bearish candlestick. You can see this is our bearish candlestick here. Uh, so this is our bearish candlestick, right? You draw the high to the low of the candlestick and you move target to the left hand side, right? So you wait for price to come back and tap that level and give you a reason why you should enter the trade. So now this, I'm on the 4 hour time frame. If you go to the lower time frame, you see other confirmation that will give you either for you to enter the trade for a buy or for a sell. So you just wait when price comes there, retest that level, and you're going to enter that trade for either a buy or a sell. So it's as simple as easy as that, guys. You just need to wait first to see other confirmation for you to enter the trade. I think let's just stop for here. Tomorrow I'll see if I can cover up what I really want us to talk about, and then we'll move to the using of trend lines. Right, we'll move to using of trend lines where I'm going to explain so about this our rally based up or stuff like this. So you can see this is a supply zone, right? So let's see how fast I can talk. This is a supply zone, the candlestick that caused this move, right? You can see this momentum here. So this is the bullish candle that caused this bearish move. So you can see this is our drop, right? So price consolidated here for a while, which is our base, and then it's continue going. So you can see this is a continuation pattern, right? So drop, base, drop. This is an example. If you check your chart, you see a lot of them as well, just that there's no much time to cover up, right? There's no much time to cover up, but if you watch the video over again, you will to understand it and practice more. So this is where we'll be stopping for today. Tomorrow we'll continue and see what we have and what we can cover for tomorrow. So I can really ask questions. So for my YouTube community, guys, this is my YouTube channel, right? So you can, well, before you watch this video, right, make sure you have watched at least all this video, or make sure you have watched what is supply and demand first, which is this part 15, before you watch this part 16, which I'm going to also drop, right? So, and you need to combine these. You don't just take supply and demand, you need to confirm have other confluence, other confirmation, right? Like your rejection candlestick. So before you even trade supply and demand, make sure you have watched candlesticks, right? Supply support and resistance. You have watched candlesticks pattern. If you come here, you see them. These are candlestick patterns, right? Chart patterns, candlestick patterns, candlesticks as well, right? So you need to know about this candlestick to combine it with you trading supply and demand. You don't just trade a particular this. You need multiple confirmation, at least three confirmation is okay for you to enter for that trade, right? Either for a buy or for a sell. At least three confirmation. So you always wait for price to, don't chase the market, right? Don't chase, if the market is going up, don't chase it, right? Don't always wait for it to come back and tap that your zone first, right? Always wait for market to come back and tap that your zone before you enter for that trade. So what I was saying something about these types of supply and demand. I also mentioned something of drop, base, rally, right? So you can see an example here as well. Let me see. I don't know if time will allow us to do that. So you can draw this is a candlestick that caused that move. So let's draw the candlestick, right? So this is the candlestick that caused that move, right? Which is our supply zone. And then you can see price dropped, right? You can see it's aggressive move, and then base, you can see consolidated for a while, base, and then it reversed back up, which is the reversal continuation. So that's it for today, guys.